Hi everyone, it's Sean from STK speaking today. We've got one exec and a chair of EQR with us today. There's been a lot of noise in the tungsten market. We spoke with the chair, Oliver, recently on. The market is still very buoyant with the tungsten price, and there's been some big changes announced at EQR with their processing in Saloro, and we're hoping to get an update on those drill results switching into high grade with Mt Carbine, which could mean the company is getting cash flow positive on both mines. And then we'll talk to Oliver about the current market in tungsten and how the offtakes are progressing and what's happening with the TMG deal. Welcome, Kevin. Thanks for your time, and good to see you.
Good to see you, Sean.
Thanks, Kevin. There was a really good announcement EQR made recently in regards to continuing the exceptional growth at Saloro. We all knew Oaktree had the asset, EQR took it on, and it's been a terrific 12 months of your team's success getting those recovery rates up to where the mine is particularly profitable at the moment. We saw an announcement that you want to increase that yield, as you said several months ago, by another 10%. Can you just elaborate on that and how we're going to get more profit from Saloro?
There's several steps involved in the overall turnaround of Saloro and the recovery in particular. The resource is fairly well established now, and then it's all about metallurgy and getting the recovery up, as we had talked previously. So there's several steps in that. There's probably 20 different activities that we're working on, but the two big ones, and the first one that will come into effect is scavenging jigs. So we did that at Carbine, and we were able to drop our tail grades significantly. So we're going to do that at Saloro as well, which should give us a nice little bump up. They're putting in a wet screening section in front of the existing sorters and a feed hopper. That's going to increase recovery and increase cash flow. And then obviously what we announced is the sorter, buying a third sorter. So we do have this stockpile of about $5 million worth of tungsten in it at today's price. And we want to feed that into the plant as well, along with keeping consistent feed going into the operation. So yeah, it should translate into another 10% recovery, which is significant cash flow at Saloro.
That's awesome, Kevin, because that asset just keeps performing. Moving back to Australia, up in the top end, you've had some challenges historically with Carbine, but I was very happy to see a few weeks ago you had some drilling results which hinted at the grades which we've been waiting for at Mt Carbine. And from conversations that we've had and you've put to the market, you're starting to process that high grade now, which that does translate to those higher margins to get to profitability. How is the high grade going? And do you see it continuing so we can get Carbine producing profits? So EQR gets to the high grade on all mines, producing profits, which is high returns for shareholders, which is what everyone's been looking forward to.
Yeah, Sean. So we've taken out the east, what we call our east end of the pit, to accelerate that stripping to get down as fast as we can onto these high-grade ore zones. So we've drilled them off on 10-meter centers. So we really understand the ore body now, and it was a nice surprise that the Atlanth vein, which happens to be like the main ore body in Mt Carbine, which we haven't really only started. We only touched on it last September when we got all the high grade coming out. And so we're now approaching what we call our Johnson vein and the Atlanth vein, with both at the right levels down at that 335 level, and they're both very high grade at that level. So we are, and we had taken a section out about 3 weeks ago out of the Atlanth at the very east end of the pit. It was very nice grades coming through. So we have been struggling with water, in particular, Townsville being closed off. Delayed our explosives getting down there. We thought we would be there by now, but we are expecting the next high grade blast on the 7th of March. So we're anxiously awaiting, but we are behind schedule a bit on that high grade.
With the high grade, I mean, if you fall off schedule, but you get back on track, That's always what investors want to see. Will there be more consistency moving forward now that you're starting to understand the ore body better? With the blasting and obviously you've got to excavate it, then put it through the crusher, through the mechanics of the sorters of how that works. Is
Yeah.
it going to be more consistent moving forward?
Yeah, yeah. And again, Sean, we had to strip back the high wall to get down onto these levels that we're at now. So it's been a huge push on stripping over the last 4 or 5 months in particular that we've been doing. So yes, once you're into it, you stay into it for a good 2 years that ahead of us. That we have very nice high grade material ahead of us that we'll be putting through the plant.
So when you're saying 2 years, me as a current investor of EQR, I must admit that we do own shares in STK. We participated in the placement recently. So you're stating that you've done all the hard yards, you've got through the stripping, it took you some time to get to the body, you've done your drilling, you now understand it, and you've got 2 years worth of high grade coming through, which can be increased, obviously, with more drilling and more exploration to get to
Correct.
the right areas. But we've got 2 years of good cash flow in a
Yeah.
market that's going up.
Yeah, yeah, correct. And then we got to get underground in that 2 years. We got to get underground drilling and defining the resource more. And there is a pushback phase 3 that we also have that takes it up to about 4 years of operation. So it's yeah, there's a great life ahead of Carbine. We're still only talking 20% of the ore body that after the 5 year of open pit mining, that's still only 20% of the known ore body at Carbine that and we convert resource to reserve. I think we're 86% conversion rate on resource to reserve. So we have a long life ahead of us at Carbine yet.
The only risk in me is just thinking 2 years. I know you've got 5 years of ore body from what you've just said. Will there be a delay again when you're trying to work out where to strip back, or can we actually strip back whilst we're blasting and processing the high grade this time?
Yeah, yeah. So the strip ratio drops way down after this year. You end up almost at a 1-to-1 strip ratio, which is nothing. So we'll be peeling back the west end of the pit as well at that time on a pit 3.
So we shouldn't affect cash flows going forward, then we should have consistency, which is what the market's been wanting to see.
Yeah, yeah. Agreed. Yeah.
Okay, Kevin, that's a really good update. So we've got the two mines, the two biggest Western mines in the world, which EQR own. It is the biggest tungsten producer in the Western world. And we'll touch on a few things with that, what that means with your chair, Oliver, in a minute. But you'll be having a lot of tungsten coming out, going into a market where there's not much going into.
Yeah, correct. The demand, as Ollie I think will attest to, is very significant right now.
Excellent. Well, thanks for your time, Kevin. Look forward to it. If any investors have any questions, reach out to us and we'll certainly pass those on to Kevin for our next update. But thanks, Kevin. Now I'd like to welcome Oliver, the chair of EQR. Thanks, Oliver, for joining us. A very exciting time.
Yeah, absolutely. Thanks, Sean. And it's a bit of a twisted role today. Probably the first time that you see me in a hard hat. Normally, I sit in the air-conditioned office where Kevin is, and he's out in the field. But absolutely, we're out in Vietnam this week visiting, as you know, one of our largest customers, and now just standing in front of the TMG smelter, which is also quite an exciting development for the company.
That's good to see, but we'll touch on one of your largest customers in a second. But Oliver, I was there not too long ago, and it was very bloody hot. So it's good to see the TMG deal is very much alive. I know from the TMG side, they're still heavily engaged with EQR. There's a lot of things happening. And I know from our side, from TMG side, that George Chen is there with you at the moment, who's the 40% owner, and continued negotiations are happening at the moment.
Yeah, look, I would say, I mean, we have made recent announcements. I don't think there's anything to be negotiated now. It's about discussing how we could implement things. And I mean, when I look around here, I couldn't turn the camera, but we are currently preparing for a test production run, which was one of the key conditions to come to a closing of the transaction. And as we were from the first day, it's an impressive team. They really know what they're doing. So we're just here standing by and passing by actually. Hopefully in future that will be Mt Carbine concentrate going through the smelter. That's the plan. I think that's the strategic rationale of the transaction. But nevertheless, even in what is a time of very high demand for tungsten raw materials, as you know, with the recent announcement of China, I mean, these guys have secured enough feedstock now for the first production run that happens in the second half of March. So we're very positive, looking forward to see it running in live. And we are very bullish on this opportunity, and the market is, I think, going in the right direction.
I think, Oliver, it goes without saying that the transaction, when we bought it to you, it was a lowdown misere. TMG was a company that needed tungsten, and it needed a partner with a balance sheet that could afford to do it. The balance sheet equation got taken out of the picture with EQR because you've actually got the tungsten and got the support of your partners, like Chronimet, for example, to make this facility work with trade finance and the sort. So it was a very 1 + 1 = 10 type of scenario when we came and approached you. And it's good to see that it's still got legs and that you're obviously at the plant today working out the final details and just doing the investigation as part of the DD.
Yeah, no, absolutely. I think a strong rationale. We've outlined that, and there's more to be added as we go, I guess. But just to repeat myself, I mean, China has been very clear recently that they're not going to support the Western markets with significant exports. We've just talked it through this week as well here in Vietnam, being the largest source of tungsten outside of China. So all the actors in here also likewise see it as an opportunity to step up their game. It will take a couple of weeks still, I believe, until the Chinese government and the industrial players and the exporting entities will resolve what is required to restart, but there will definitely be reduced volumes. The whole narrative of dual use, reduction of dual use supply, wouldn't call it harming the US and the Western defense ambitions, but it's definitely real, and we could probably currently sell 3 times the volume that we are producing out of Carbine in Spain. So it is an exciting time, and we just need to make sure that we get our homework done internally.
Ollie, as we just saw with Kevin, the company is hitting, it's gone from a V2 to a V8, and I've used that analogy recently for something else, but the reality is your mines are starting to really perform perfectly. You see Saloro ramping up. You've got Carbine finally hitting that high grade, which shareholders have been waiting for, and Kevin was very specific, but those drill results that came out recently have proved that it's there and they're stripping into it. With all this extra tungsten coming into the market at such an opportunistic time, how many different countries are coming at you for offtakes or funding proposals? Because it's a very exciting time to be the largest producer in the Western world with this extra supply coming into your mines.
No, absolutely, Sean. I think the sales side was never an obstacle. I think with a little bit of personal background on the Chronimet side, obviously, that was also one of the reasons why Chronimet reinvested into the project, many years ago, and with all the hiccups and, initially the COVID and then obviously getting scale into a mine in Australia. I think we've mentioned it many times. Mining cost, just as a standalone cost item, is double than what it is in Spain. So you need scale in Australia. That goes without saying. We are in the process of redefining our funding approach for the expansion project at Mt Carbine, which is absolutely key, and that's one of the KPIs for Kevin now in the months to come. When it comes to the sales side, again, through the channel of Chronimet and the facilities provided, I think we are well balanced. We supply approximately 1/3 into Asia, 1/3 into Europe, and 1/3 into North America. So we're not really depending only on one customer or one end-use applications, but I think we are well balanced across the continents, and without doubt, we could sell 3 times the amount that we are currently producing.
Have you seen any difference in pricing in the markets? Are certain territories paying a higher price than others?
I wouldn't say that outright, Sean. What I would say, and I think I addressed it in our last conversation, that we could optimize ourselves internally. One of the reasonings why I think, or one of the contributors for Spain as part of the turnaround was certainly the fact that we have looked at the flow sheet and we've looked at the ore body and we said, look, there's an optimum product specification for us. So we do not customize for different markets or individual customers. And all our customers have been very supportive, because increasing the recovery by almost 30 percentage points We could go back to all the customers and said, look, that's the specification which is best for the asset. But the good news is that while we're not adjusting the price up or down, the good news is that you actually get 30% more volume, and everybody was very welcoming that.
I guess the real thing I was trying to hint at is that there's obviously a lot of demand for your product. You've historically got prepayments from your loyal customers. Is there any of that on the horizon as well?
Yeah, while you address it, we haven't made any specific announcement. That might come very soon. We have been negotiating long-term agreements over the last 6 months. We are now in the end of the first quarter of 2025, so we are closing out some of these discussions. And what I think we can say, with the support of Cronimet primarily, each and every contract that we have signed in the last 6 months has a prepayment attached to it, and that's an investment of our customers into the projects, into the company, into EQR. So this is pretty unheard of in our industry. These projects are very difficult to fund, and we're very happy that our customers basically come alongside and provide financial contributions. They will come over time, step by step, but the contracts are being signed as we speak. And so that is an important source of funding for the company, definitely.
That's huge. That's a very big statement that you've made there. Oliver, thank you so much for your time. We do appreciate that the high grade of carbine, the Saloro continuing to ramp up. Obviously the market's there wanting your product, happy to pay in advance for it. You've alluded to, and you're still looking at the Team G transaction we're actually sitting in front of a refinery. So it looks like all systems go, guys. The share price has had a really good run over the last little bit, which is really good to see. I think there's a lot more upside to go. So I think we still are at very cheap levels for the share. We've still got interest in buying it for ourselves personally at STK, and we still see it as very good value. So thank you very much for your time, gentlemen. I look forward to updating investors with yourselves probably in a month or so. So thank you.
Thanks, Sean.
Thanks, Sean.